Good morning, my YouTube friends. Today is Sunday, December 17th. I hope you're all doing well. Welcome back to The Rational Investor. Sunday is quickly becoming one of my favorite days because I get to review the portfolio that I did for you guys, see how it did this week, and kind of update you. Stick around, we'll go through the portfolio. I'm really excited. We had an awesome week. So for those of you who haven't seen my Sunday video, basically what I've done is I opened an account, I deposited $10,000 in it, I bought 20 stocks that I think are great stocks to give a good spread of the stock market and kind of diversify well, and we're going to update every week how they're doing. Before I get into how we did this week, if you haven't already, do me a favor, hit the subscribe button, maybe hit the like button as well. That helps YouTube's algorithm. It helps others find me if you're enjoying the content. I really do appreciate that. Like, it's super cool. I can't tell you, this is not sarcastic. I can't tell you how excited I am to see how many people have subscribed to the channel already. It's really cool to me because I just do this stuff because I like markets and I talk about it. And it's kind of cool to me that other people are finding it interesting and subscribing and chiming in. Now, of course, make comments as well. If you guys have things you like or if you don't like some of the things I say, I like getting into the conversations. I have no problem with people who argue with me. In fact, that's kind of the fun. So we'll go from there. I'm going to go over the stocks that I picked and then how many shares, the price, the value, the profits we have in total, and how we did week over week. The other thing I'm going to do is I'm going to put a link in the description for opening an account at SoFi. Not only do I own stock in SoFi, it's where I open an account with my 13-year-old son as well. And if you click on the link, it gives him a gift in that account. It helps me teach him about this stuff as well. So I think it's super kind for those of you who've been doing it. The other thing, it helps you get on your journey to investing as well. What I find is really cool over the years that, you know, when I was a kid, if you wanted to buy 100 shares of a stock, you had to go to a stockbroker. And I remember the first one I bought, I think they charged over $400 to buy 100 shares of stock. So when you think about it, you really have to invest a good amount of money because you have to overcome that charge that they were making. Now all these companies, they do it for free, whether it's SoFi, E-Trade, Fidelity. Like, there's so many out there that do it. It's super cool. Like, you can get started with 25 or 50 bucks and just add into it and start learning about all this stuff. So I've been teaching him because it's easy enough for me to put $50 in the account and buy a stock for him and let him pay attention. Now, what I like is he does exactly what I hope. He doesn't watch too often. We just let it run. And every now and then I'll say something about, hey, did you notice this or did you notice that? So let me go over the stocks. I'll do a screenshot of the whole thing for you guys as well if I remember at the end. So stick around and let me know what you think. So real quick, and I'll ramble through the 20 stocks. We have ADM, which is Archer Daniels Midland. We have Amazon, Best Buy, Bristol Myers Squibb, Caterpillar, Enphase, Foot Locker, Google, a stock that the ticker symbol is JEPQ, which is a JP Morgan NASDAQ covered call strategy ETF. We have Meta, which I still think of as Facebook. We have 3M. We have Altria Group, which is the US version of Philip Morris. Nextera Energy Partners. We have Pfizer, a stock that the ticker symbol is PFFA. If I remember correctly, it's like Vertis something or other preferred stock fund. It's an ETF that buys preferred stock. And since I don't own any individual preferred stock, I find this is a really good way to get good yield on being involved in that sector. Qualcomm, QSR, which is a conglomerate of, some fast food chains, including Burger King, Starbucks, ExxonMobil, and Zillow. So those are the 20 that I picked. There probably could have been some places that I could have tweaked. My general thought when investing in stock market is pick the 10 to 20 companies you think are the best in the world. And then don't worry about the price. Just put a little money in them and keep adding on to them. I'm not a firm believer that you shouldn't have more than X% at any one time in a certain company, because then you miss the real growth of something. Like, if you invested in Microsoft 30 years ago and you started taking out because it became too big a percentage of your portfolio, you missed the potential to really crush it, or Apple or some of the others. So, anyway, let me go over how they did this week. And again, chime in, let me know what you think. Also, again, if you stick around to the end, I'm going to do a screenshot of the paper where I wrote it all out. And I'm going to go over the totals of how we've done for the week and how we've done for the first month or the 4 weeks, which I'd love to take a ton of credit. My timing has been unbelievably lucky because I've crushed it. But anybody who touts or promises the types of return that this account has made, by all means, be really suspicious. There's no way somebody can guarantee huge returns. And if you see stuff in the comments for Miss Mary or somebody else who, oh my God, they've made me, $10,000 a month, please. It's got to be a scam. It's hard for me to believe anything like that is real. Now, also keep in mind, none of this is financial advice. I'm just talking about stuff I've done in my life. I am just a YouTuber talking about the investments I made and my thoughts and my processes. Not only would I not listen to me, I wouldn't follow anyone in just indiscriminately and just jump on board. There's a lot of good advice out there, but there's a lot of bad advice as well. I've seen a few younger kids talking about some things that give really high yields that are super risky, and they're sold as these great return on investment type of things. But I don't think a lot of people investing in them often recognize the dangers in those products. So be really careful who you're listening to and the information they're providing. You guys really need to make your own financial decisions and kind of do your own research. And if you're coming to these channels, obviously you're interested in it and you're already taking the right steps in that direction. So there's no harm in just doing Google searches or whatever else to find out a little bit more. Anyway, stock number one, Archer Daniels Midland. We have 6 shares of it. The reason I picked ADM, that's a stock ticker as well, ADM, for those of you who want to look it up, is they're in a space that's really hard to compete. They're in food packaging, storage, supplying, and things like that. And I don't see it as a place that if a new company wanted to come around, it'd be really easy to just jump in and start competing with them. So we have 6 shares of Archer Daniels Midland. It closed this week at $75.75. We have a total value of $454.50 in it, and we've made $11.34 in total over the 4 weeks. And week over week, we were up $12 from last week. Next in the list is Amazon. Uh, I love Amazon, and the higher it goes, the more I want to buy, to be perfectly honest. I just think it's one of those stocks that they're a behemoth and they're going to keep taking market share from other things and they're going to continue to grow. We have 4 shares of Amazon. Closed the week at $149.97 for a total value of $599.88. Our total profit so far is $19.56. Week over week, we were up $10.20. Best Buy is another one I picked. Now, I don't know that I think Best Buy is the best of the best, but they were a little oversold in my opinion. I like the retail space because they got really out of favor, and maybe I'm a little too price sensitive because this falls outside of what I said originally about just picking the things that you think are best. But I don't see anything wrong with them either. They pay a dividend, and I thought they were cheap. So I picked up 8 shares of Best Buy. They closed this week out at $77.32. The total investment at this point is $618.56. And we've had a total profit of $74.56, which is awesome for only 4 weeks. And week over week, we're up $26.64. Next is Bristol Myers Squibb. Its ticker symbol is BMY. They're just in the drug and manufacturing and distribution space. We bought 10 shares of it originally. It closed on Friday at $50.89. Total value $508.90. Our total profit so far is $15.70, and week over week we were up $5.80. They also pay a decent dividend as well, and in general, I think dividend stocks are probably going to do pretty well if the Fed ends up cutting rates, because as the yield on CDs and treasuries and what are considered secure investments go lower, the stock price of the ones that pay dividends are likely to go higher to take on a little bit more risk. Next on the list is another one of my favorites, which this is all I own. I really wish I owned more of it in my main portfolios. But Caterpillar stock, which the ticker symbol is CAT, we own 2 shares of Caterpillar. It closed the week at $285.74 for a total value of $571.48. Our total profit so far on Caterpillar is $66.26, and a week over week profit of $52.48. Now, this is a great example of, kind of people rolling their eyes and thinking, what's the point of buying 2 shares? Well, we're crushing it on 2 shares. It's more about the dollar investment than how many shares you own. And there's no reason Caterpillar can't continue to grow. And we're up, what, 10% in 4 weeks? That's great return. You don't have to buy more shares of a less expensive stock. Next on the list is Enphase, ticker symbol ENPH. Boy, I got really lucky with the timing on this one, and we have 5 shares of Enphase. It closed out this week at $123.92. The total value now is $619.60. Our total profit in Enphase for 4 weeks is $152.70. I mean, how lucky is that for 4 weeks? And week over week, $104.55. Now, what I liked about Enphase is I had solar recently put in. A lot of the people who I interviewed about what company to use and what they used, 3 of the 4 said Enphase made the best products. Um, I know nothing about it. I saw that the stock had fallen from like 230 or 330 or $340 a share to under 100. They were trading around 80 when I first started watching it, and I thought, geez, that's the same thing that Meta had done last year. I don't know anything about Enphase. I'm a lot more comfortable with Meta, but I thought it was so discounted and everybody was saying such good things about the company. I thought, well, I'll buy a little and see how it goes. Next on my list is Foot Locker. Ticker symbol is FL. We bought 22 shares of Foot Locker and it closed the week at $30.48. Total value right now is $670.56. Total profit $188.02. And we're up week over week $50.38. So we've hit it out of the ballpark so far with Foot Locker too. The reason I picked Foot Locker is the CEO they took on about a year ago. Her name is Mary Dillon. She did an incredible job with Ulta Beauty. When she left Ulta Beauty, my understanding is she sought out Foot Locker and wanted to work for them. So I think she sees something in the company and a way to grow it. I'm hoping I'm right. The first year was terrible. I bought it above where it is now and watched it drop down to like $18 a share. But I mean it when I say it. I buy these things for the long term, and I plan to hold it a minimum of 2 to 5 years to give her some time to see how she's doing. And then I'll reevaluate from there. And if it continues to grow, I mean, I'm hoping this year it really just continues to drift higher and reverse what it was doing last year. And I'm hoping that she can really take it to the next level for them. I guess we'll see. Again, you need to do your own research on what you think for that stuff. Next on my list is Google. I mean, YouTube. Google owns so many products, and it's where YouTube is, and I'm now using the platform. My son watches it the way I used to watch TV. I figure they just continue to grow and grow and grow. We have 4 shares of Google. It closed the week at $132.60. Total value of $530.40. We're down overall so far over the 4 weeks. We've lost $4.08, and week over week it was down $9.56. Next on the list is the one I mentioned, which I refer to as JEPQ. Ticker symbol is JEPQ. So JEPQ, the goal of them is to get yield. Essentially, they sell what are called covered calls on the Nasdaq stocks. For those of you who don't understand what that means, is they own the Nasdaq stocks and they sell calls against that, and then they distribute that as a dividend. So really what you expect is the dividend payout that they do, and it's nice that it did okay. We have 10 shares of JEPQ. It closed the week at $50 for a total value of $500. Total profit $9.90, and week over week $7.40. Now it'll put out dividends. I'll make comments about that as well as we move along. Um, Next on my list is probably one of my favorite stocks, although a lot of these are, so I might say that more often. But I really like Meta, or what I still think of as Facebook, ticker symbol META. We own 2 shares of Meta. Closed the week at $334.92. Total value is $669.84. Total profit so far, a whopping 34 cents. So that's pretty exciting. But at least we're not in the red anymore. And week over week, it was up $4.34. I like that. I feel like nobody really likes Mark Zuckerberg. So I constantly feel like Meta's always undervalued. In terms of PE ratio, they do great. They make a lot of money. Their growth rate is pretty good. I figure they'll continue to grow. They own Oculus, WhatsApp, a bunch of other companies. Instagram is Meta, so I just see great potential for them in the future. Next on the list is 3M, ticker symbol MMM. I think 3M's a great dividend stock. They had a little lawsuit that really plummeted the stock a good bit. Pays a great dividend as long as they get through the lawsuit and it doesn't really hurt them too bad. I think it's a great bargain, but there is some risk there because the lawsuit was serious about them damaging the environment essentially in other countries, and they've done some real damage. So I don't know how it'll work out, but the stock's done great over the past month or two. We have 5 shares of 3M. It closed the week out at $106.98. Total portfolio value of $534.90. Total profit so far $59.90, and week over week $18.05. Now, when we bought it, it was paying a 6% dividend, which to me is incredible for a company that's actually going up in value as well. Obviously, as the price goes up, the yield goes down, so it's not quite the same. But I even think here at 106, 107, it's still probably a good value. Next on the list is Altria Group, which ticker symbol MO. Bought 11 shares of Altria Group. I understand it's probably one of those companies people don't want to buy. They do cigarettes. I try not to have an opinion about good or bad, or I don't weigh into whether I think it's something that I don't approve of, so I don't want to invest in that company. 11 shares. It closed the week out at $41.75. They also pay like a 9% dividend, and I love dividends. I probably shouldn't. In some ways, you're better off not getting the dividends because it gets taxed at your income. Whereas if you just leave a stock in, and especially if you get to long-term gains, you get some tax benefits. But if you just leave it and never really need to sell it, you don't owe any taxes. And if you leave it in for over a year, you get less taxes than, I mean, depending on your tax bracket, than what you'd owe as earnings. So total value $461.12. Total profit in the 4 weeks were up $12.10, and week over week it was $6.82, which is great for a company that pays a 9% dividend. Next on the list is definitely my most favorite of recent. I hadn't heard of them before. Stock had fallen a ton, which is NextEra Energy Partners. We bought 20 shares. Now, it had fallen from like $80 a share to close to 20, and they paid an unbelievable dividend. If the news on the company is accurate, and all that's happened is they've lowered the rate that they're going to increase their dividend over time because of inflation and higher interest rates and everything else. That's great news to me, because when they were in the low 20s, they were paying a 15% dividend, and even where it's gotten, which is $30.16 is where it closed out on Friday, it's still paying like an 11 or 12% dividend, which is a great yield. And if they're able to continue to grow that, I think it's a great investment. On top of that, since the Fed announcement, it seems like they're probably going to cut rates, so we'll have lower interest rates. That should ease their cost of the higher interest rates. And they sold they're in contract to sell their pipelines to Kinder Morgan. And if they get that sold, that should be able to pay off a ton of debt. It should ease up all the things people are nervous about. Now, maybe when the stock falls that far, maybe there are other things going on that are worse than I think. Company Seaport downgraded them at one point as well, so maybe they know something I don't. So, again, you have to do your own research, but I really like the company. We have 20 shares of it. It closed the week $30.16. Portfolio value of $609. Our total profit is $142.80, and week over week was $89.20. Now, I have no issue whether that stock goes up or down, because when we bought it for the portfolio, it was more about getting the 13 or 14% dividend yield that we should get, which will get paid every quarter. So I'm beyond thrilled that it's up as much as it is, and it makes me feel more comfortable that maybe I'm right on the prediction. But it's all about the dividend for them. Next on the list, this might have been a mistake, is Pfizer, ticker symbol PFE. So the mistake is I bought more shares of Pfizer. They had bad news. The stock's been really struggling and it dropped a bit more. The reason I'm not sure about that decision, as much as I'm a long term investor, I find sometimes when stocks are out of favor like that, they could be out of favor for years. Now, I don't mind owning Pfizer for years. They pay an okay dividend. And as long as they can afford to continue to pay that dividend, it is what it is. But it may not have been the best decision to make to pick more up of the ones that aren't succeeding. I know a lot of people talk about buying stocks on the lows. I don't know that I'm such a fan of that. I like to buy things that I think are continuing to grow, not something that's really struggling. Anyway, Pfizer, ticker symbol PFE, we moved from 15 shares to 20 shares. It closed the week out at $26.63. Our total value now at this point is $532.60. We've lost $46.53 for the in total so far, which really that's not a big deal. That doesn't bother me. And we're down $32.25 week over week. Again, I just don't know that investing in something that I think is at the beginning stages of struggling is the best timing. Next on the list is that one top stock ticker, PFFA, which is the Virtus. It's a preferred stock ETF. I don't own any preferred stock on its own. So to me, this is a good way to kind of get into that space. They're paying like a high 9% dividend and they pay monthly, and it was as good as 10% at one point. We have 25 shares of it. It closed the week at $20.43, total value of $510.75. We're up $35.75 on the stock, and week over week it was up $13.50. I think the dividend sensitive ones, like I said, since the Fed kind of made it clear they're probably going to start cutting rates, and the 10-year got improved and yield got lower. I think if you're getting dividends and these companies aren't in bad shape, that yield is going to be more attractive as the guaranteed stuff of CDs and stuff gets lower and lower. Next on the list is Qualcomm. I've always liked Qualcomm. We have 4 shares of Qualcomm. It closed the week at $143.13. The ticker symbol is QCOM. They make chips for phones and things like that. They extended their contract with Apple, so hopefully they continue to grow for a long time. The total value at this point is $572.52. Our profit so far on Qualcomm is $54.20. And week over week, we are up $40.64, which is friggin' awesome. I mean, I didn't even realize it. Now, this portfolio in my mind is kind of a set it and forget it type of thing. Um, if I were putting in a decent amount of money, I would have no problem breaking it up into these 20 stocks evenly and buying all of them. Again, you guys need to do your own research, talk to a financial investor, and everything else. Um, Next is QSR, maybe it, which is like I said, it's a conglomerate group. I think it's like quick serve restaurants is what it stands for, or something like that, or quality service restaurants. It's Burger King. I think it's Tim Hortons, and a few others. Maybe I'd be better off with McDonald's. I don't know. I picked it. It has a good yield. I have no issue with it, and I own some in my other account as well. But 7 shares, it closed the week out at $73.71. Total value of $515.97. Total profit $23.73, and week over week we are up $12.60. Next is one I love, but we're down pretty good on it, which is Starbucks. Um, I assume you all know what Starbucks does. We have 4 shares of Starbucks, closed the week at $96.75. Total value $387. We're down $33.40, but we were up 56 cents for the week. Next is Exxon Mobil, which again, I assume you guys know who that is. 4 shares of ExxonMobil. It closed the week at $100.90. Total value $403.60, down $18.60 over the 4 weeks, and we were up $5.40 over week. I figure if I'm putting in 5% into 20 different stocks, probably want something in the oil and gas industry. So I picked Exxon. I mean, sure, Chevron or BP or any of the others are just fine too. I just wanted to make sure I had something in there because I think it's a space to be in. They also pay a dividend. And last but definitely not least is Zillow Group. We bought 10 shares of Zillow. Um, I think as the real estate market evolves, I'm hoping that Zillow owns a percentage of market share of real estate, and they squeeze guys like me out of that industry. I know that sounds silly, but I really do. As an investment, I think they could be just one of those that hit it out of the ballpark. It's a bit of a riskier investment. I wouldn't put a ton of money in it. That's just my own advice. Again, you need to make your own decisions. Just my hope long term. And if you watch last week's video, I go into it a little bit more. But our 10 shares, it closed the week at $55.80. Total value in the account is $558. Total profit so far, $169.10. Really lucky timing on that. And then week over week was $93.90. This week, Qualcomm paid a $3.20 dividend, and week over week, we were up $512.63. Now, that's why I say I wouldn't expect those types of returns. Totally lucky, totally absurd. Anybody touting that, oh, I can get you that type of return, I would just be really cautious about that. Our total profit in 9 weeks, and I'm thrilled, is $951.40, and the total value now is $10,958. Sorry, $10,958.83 when we started with $10,000 4 weeks ago. So that's just incredibly lucky and awesome. Now I'll take a picture. I'll post this at the end so you guys can see. And again, let me know the ones you think. I'm sure there are places I could have tweaked it to be in a little bit better of a space or whatever else. But really fortunate timing, really happy with how the portfolio's been performing so far. I would expect it to have some down weeks as well. So anyway, if you've made it this far, thank you so much. Don't forget to give a thumbs up, subscribe, like, and comment. I mean, I love the conversations. Have a great week. I'll make all my normal videos and then we'll follow up again next week.